Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is January 8th, 2018, and tonight we're going to take a look at the Canadian dollar. The ETF on the long side is FXC. Got the short intermediate point to the upside. The longer term trend from our perspective is still flat, but it's inching higher and should be bullish here. Depends upon just what kind of strength we have here in the coming days, or the reversal that we're going to be looking for to see if this remains sidelined here. So for right now, we're still mixed. The technical rating, in part because the short and intermediate, is pointed to the upside, but the seasonal tendencies are pointed lower, which I'll explain here in a second. But the things that I want you to really be alerted to is that we have a pivot high that has occurred in our elastic level, and this is kind of a major deal with the Canadian dollar. And if we look at the patterns today, the 8th, we actually had a high surge. So zero means today's action. So in the Canadian dollar, basically have a couple of different alerts. You can see that we had a high here in the S&P. We had a stretch high that occurred here in sugar. So you can see that these things pop up all the time. But specifically for the Canadian dollar, with this high having occurred here, there's reason for some concern. So we'll take a quick look at the market, the Canadian dollar, and this is the daily bar basis for Canadian dollar. And the resistance level and or support, because it's really touching it right now, is set at 80.52 in the Canadian dollar. Now this right here is a resistance level based upon where the market is right now, but it's only at an 8, which isn't really all that strong. But if we go back in time, you can see that we had one that was at 24, and when you highlight them, they're both connected because they're touching one another, and that gives us a stronger support resistance level. And so the market has rallied up to the to where we are now from lows set, and you'll see that our systems went long the market in the 19th and on the 20th, so these 2 days right here, and ever since then the market has rallied to the upside. So it's had a nice little trend to the upside, but it's now in overbought territory, which is a little unusual for the Canadian dollar. So if we come back to the website, first thing I want to do is I'm going to show you that the Canadian dollar is at the higher end of all the markets we track, and we're looking at the elastic level. When you have 40 different markets, the Canadian dollar is at the upper echelon here. It's number 6 on the list. That's surprising. And the reason you know it's surprising is if you come to the market tendencies for elastic level, and we're just looking at overbought territory. We're not talking about extreme. That's what the X stands for. It's just normal overbought territory, which is where the market is right now. If we scroll down here, you'll see that Canadian dollar is the third from the bottom. It doesn't go into overbought territory, just normal overbought, not even talking extreme, normal overbought territory all that frequently in comparison to all the other markets. Is number 3 on the list. So the fact that it's in overbought territory has gotten ahead of itself. It's toying with that support resistance level that I was referring to. That's reason for concern for those of us that are long the market. Now, longer term, and I say longer term, the next few weeks, if that. This is a chart for the Canadian dollar, and you can see based on the 5, the 10, and the 15 years that come into January that the market has a tendency to trend to the downside. This is in part because of what happens with crude oil. Canadian dollar and crude oil are interrelated, and so you'll see that Canadian dollar itself has a tendency to sell off into the January period, and that's obviously where we stand right now. So the fact that we're up against resistance to where the market is right now, the fact that we have an elastic level extreme case, where we're in overbought territory, which doesn't happen all that frequently, I've got reason for concern because our systems, as of 4:45 here, It'll be updated here in a few minutes, but at 4:45 we have three positions, three systems, all of which are Rigel, 60 and 90 and 120 minute bar. They're all pattern based, but they all went long on the 19th and or the 20th. And since that time, as I showed in the daily chart, the market's been up, up and away. So what we would expect is that these systems, because they're short-term oriented, 60, 90, and 120 minute bars, that we would expect that those systems to liquidate themselves here fairly soon, if in fact the market does find the wherewithal to stop here at this resistance level, this 80.52 level. And if it's able to do that and it comes down to some logical level, which might be this level right here, which would be at 78.46 right through here, which would be pretty far away, obviously, from where we are right now, or it could actually start to track the 50-day moving average. Now, the 50-day is starting to peak itself up. Same too with the 200-day has been flat and is now beginning to head higher. So I wouldn't expect it to fall too far, but it has gotten ahead of itself, as I pointed out, with the elastic level, and it's interacting with this resistance level that we're at right now, and we're actually sitting on it. So for those of you that are trading Canadian dollar and are long, as we are, pay close attention. It's not to say the market can't just meander and stay around this this level, and then the elastic level and the overbought territory would begin to subside. But do pay close attention to your longs, and there's a possibility that our systems could either go flat or go short the market should the market really start to sell off here. So we'll see what does take place, and we'll take a look at some other markets here, obviously in the coming days. And the other thing I'll point out, I've had some questions specific to understanding more about the profit taking, the market reversal, and the environmental change indicators we have. The plan is to do some independent videos that will help to explain what these represent and how you'd be able to benefit from them. But in general terms, profit taking, and it's a high, you'd want to look to take some profits, as I've been alluding to with the Canadian dollar. If there had been a low and you were short, you'd want to take some profit taking. If you had market reversals and you had a low or a high, you'd expect the market to reverse course. If it's high, it's going to reverse to the low side. If it's a low, it's going to reverse to the upside. And then the environmental change, those are an animal to themselves, where they will indicate if there's a major adjustment that's going on with a particular market and how you might want to particularly trade that. But that's kind of longer term, while the profit taking, the market reversal, or what I'll term as shorter term, if you can put it in those terms. So bottom line is that we'll continue to delve into some of these different types of indicators, and for right now you understand what to do with the Canadian dollar, and tomorrow we hope to be able to look at another market. Thanks very much for watching.